Now, I'm sure you would have a fairly good idea as to what is the discount for lack of marketability and what is discount for lack of control. So, first, let me ask Paman sir. Paman sir, how do you respond to discount for lack of control? Now, what does it mean?
सर प्रसन्न साहब को बोलने दीजिए, हम जरा 1 मिनट टाइम लेते हैं.
All right, okay, sir. So, Prasanna sir, आप बताइए discount for lack of marketability. What do you understand by this?
Yeah. Uh, the marketability of the company, if there are any restrictions to affect the transfer of ownership,
Perfect. Perfect.
like for example, if it is an unlisted entity,
Yes.
it is not easily marketable,
It is
or
not
it
easy.
involves cost in marketing.
Hmm.
So that involves, that requires a discount.
Correct.
Because if we are assuming it to be freely marketable,
Hmm.
then that is the enterprise value. And if
Yeah.
you cannot market,
Yeah.
obviously there should be a discount for lack of marketability.
Perfect. Perfect. And मैं आपको बताऊं कि there is a full possibility that you will get two questions in at least one question on DLOM and DLOC. So एक क्वेश्चन तो 100% आता ही है and the question is very simple. What is full form of DLOM? And full form is discount for lack of marketability and
Yeah.
DLOC full form is discount for lack of control. So अगर ये concept आपके दिमाग में बैठ गया तो आपको याद रखने की भी जरूरत नहीं है and they will give you some combinations of DLOC and DLOM, some full form, and you just have to say DLOC is discount for lack of control and DLOM is discount for marketability, lack of marketability, and you straight away get 1 mark or 2 marks on account of this. This question invariably you will find. Okay. So number one, Prasanna sir, what you have said is absolutely right. So when a seller is selling the shares that belong either to a company which is a private limited company, or it is an unlisted company, or it is a listed company, but for some reason trading in that company is locked for the time being. So that will put the buyer of these shares in a difficulty, in an inconvenience, and that is he will not be able to transfer these shares freely at his will. In case of private limited company and unlisted company, this inconvenience is going to be for a longer period. In case of a company which is listed and which is blocked, assuming it is that lock is going, deactivation is going to be resumed soon, he will have the temporary inconvenience. So obviously the buyer in a case like this will demand a discount for lack of marketability. तो ये जैसा ही ना, हम कोई चीज़ मार्केट में खरीदने जाते हैं और समझो वो प्रोडक्ट जो हम ले रहे हैं उसमें कुछ डिफेक्ट है, तो हम जो दुकानदार है उसको क्या बोलते हैं, देखो भैया तुम्हारा ये जो तुम हमको दे रहे हो डब्बा, ये डब्बे में स्क्रैच लगा हुआ है, तो ये स्क्रैच के लिए तुम हमको 2% 4% कम करके दो. सो दैट इज the same kind of discount, that is discount for lack of marketability. So if you are not able to market the shares that you are buying freely, that means that's a defect in the product that you are buying, and you will demand a discount for that. That means you will expect that the seller should reduce the price by certain percentage to compensate you for that lack of marketability, and that is discount for lack of marketability. Number two, discount for lack of control. Now, what does it mean? It means, the case that we did little while ago, in that case study, the promoters were selling 26% stake, and we all understand it very well कि अगर किसी के पास में किसी कंपनी के 26% शेयर हैं, that means he can stall any special resolution of that company by virtue of he holding 26%. That means when I am selling such a big chunk of shares, so in that case, I as a seller would demand a premium, because I am not only selling shares to you, together with those shares I am also giving you a controlling right. And that means what? That means you would be able to play an active role in the management of the company. You can demand positions on the board. You can demand interference in the operating policies of the company, financial policies of the company, decision making of the company, alteration of the memorandum of the company, taking of new loans by the company, giving loans to anyone by the company, for the mergers and acquisition of the company. So you can intervene in all those decisions, and therefore you are not only getting shares, but you are also getting a controlling right. And as a seller, I would demand a premium for giving you that right, and that premium is known as control premium. That premium is known as control premium. So that is your, and that also will need to be adjusted. That means what? That means I will tell this buyer, look, I am giving you control premium, so discounted cash flow value is coming 1000 crore, and I want you to give me 10% on account of the control premium. So you pay me 1100 crore and I will transfer my shares to you. So this is how the valuations are arrived at, or the prices are negotiated. Okay, so that is your some adjustment that you make in case of the in case of the amount of value that you arrive at using the discounted cash flow method. Now, not only we have control premium, but we also have something which is known as synergy premium. And let me
Sir,
throw this question to Baman sir. And Baman sir, please tell me, what do you understand by synergy premium?